Today we consider 5 big reasons why the gold bull market has years left to run. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so please do consider subscribing. Yes, many are frustrated with gold's performance in 2021, particularly when compared to risk assets such as cryptocurrencies or even stocks. However, personally, I just don't think that there has ever been a better time to own at least some gold than now. Obviously, there's a huge number of risks out there, but just last year, gold attained a new nominal high above $2,000. Yes, crypto and stocks have stolen the limelight and deprived gold of sustained price gains, but gold bull markets are never smooth running affairs, as this excellent chart from Marin Katusa just highlights, where we can see the various different gold bull markets as depicted by the key in the chart. So it remains early days, considering we're witnessing the end of the Western Empire and a rise of a new order taking place right now. Moreover, just consider the price of gold in the Weimar Republic, which took some time and declines before the price really began to move hugely, as we can see. And to that end, my first reason is the so-called transitory, but is really untransitory inflation we are seeing right now. This is deliberate policy. This promotes the potential for a flight into real values, as well as Austrian economist Ludwig von Mises wrote. This is the frantic rush to spend all monetary savings and other available cash buying goods, whether they're actually needed or not, in order to avoid holding, even for a short time, any rapidly depreciating currency. Now, this occurs at that point in the development of inflation when the public is convinced that prices will continue to rise endlessly and at an accelerated pace. And we are certainly beginning to see that now. Other goods set to benefit here include household staples such as oats, beans, pulses and other grains, as households become wary of potential shortages and further inflationary price gains. Moreover, as stocks have hit some inflationary headwinds recently, we see the potential for the S&P 500 and the S&P commodities ratio to reverse, and likewise the Dow Gold ratio to also reverse back downwards. Second, there is the expansion of the central bank balance sheets. This process has artificially suppressed rates and promotes a zombification of the economy via malinvestment. Yet this process is enabling direct debt monetization of government fiscal deficits. As this currency flows into the real economy, it drives up consumer price inflation. The inflation tax is desperately needed to reduce that real value of national debts. In turn, this will keep real yields negative, and theoretically, this is good news for gold. Furthermore, it leads us on to our third point, and that is the prospect of sovereign debt crises. With global debt up $36 trillion since the spring of 2020, with many nations struggling under the prospect of deteriorating demographics and enormous unfunded liabilities, there is the very real prospect of sovereign debt crises breaking out across the world. And it is no coincidence that gold's 2011 high took place at a time when the Eurozone debt crisis was in full swing. And when liquidity dries up, fear resurfaces and national currencies come under severe pressure, gold's safe haven characteristics would seem likely to come into play. But perhaps you believe that the long-touted dollar collapse is only one possibility. And to that end, I'd certainly agree with you. After all, they are desperately working towards the prospect of their central bank bank accounts or central bank digital currencies, CBDCs. And this is my fourth reason as to why I will continue to hold some gold. How does the prospect of negative interest rates being applied to your bank digital currency sound? Negative interest rates in addition to the prospect of consumer price inflation running hot. And of course, we'll be told that this is being conducted for our own good, to encourage consumption and support employment within the economy. And while certain cryptocurrencies offer some refuge here in such a scenario, gold and silver will remain absolutely key. It really is a choice between slavery or monetary freedom as I see it, or alternatively, surveillance or privacy. And to that end, my fifth reason is that gold remains world money, as Jim Rickards says. It is still the asset that central banks are buying and hoarding, and while the price remains suppressed, they will continue to do so. And as we discussed in this video previously, a new world order is being established with China and Russia at its very heart. And while the West will do much to delay this appropriation of Western power, the trend appears very, very clear to me. Yet short-term gold faces headwinds. Just noticed how it threatened the $1780 mark before getting put back in its box, ready for market close on Friday. It looks as though it simply needs to form the handle on what could be a spectacular cup and handle formation. We shall see. Yet all ends of empires give rise to a collapse in paper currency values and the rise of gold. And I don't think the Chinese or the Russians would have it any other way, given the severe quantities of gold that China in particular is hoarding. So there's no doubt about it, things are about to get even crazier. Yet patience remains key. What do you think? Let me know in the comments below, and I'll look forward to seeing you next time. Bye bye.